Good morning. This is Mark Jacobs of Michelman and Robinson, and I'm sitting here with my colleague Kevin Warren from Michelman and Robinson, and we're here today to speak about operating an IRS-compliant gymnastics booster club. Booster clubs are a big part of what gymnastics clubs do, especially with respect to the competitive side of gymnastics, and proper operation of the booster club is a primary issue that clubs need to focus on in order to avoid potential tax consequences for the parents, for the club, as well as for the booster club. And running a compliant booster club can have substantial benefits for all of you on the telephone. That's why you're here today. And we're just here to make sure that you're doing it correctly, that you understand some of the pitfalls that booster clubs get into and the IRS focuses on. Now, with respect to myself, I have been an attorney for almost 20 years. I've been representing booster clubs as well as gymnastics clubs for many years. I personally do have two daughters who have participated in gymnastics. One has competed up to level 9, and the other one is a little bit lower, but I've been participating with gymnastics clubs and am very familiar with how the competitive gymnastics clubs work, what is involved in the booster clubs through not only personal experience, but in my involvement with gymnastics, I have had the opportunity to represent many gymnastics clubs now on these types of issues and compliance issues and corporate formation issues. And, you know, I love working with the gymnastics clubs, and hopefully we can help today. Now, the question that must be asked is, why create a booster club? It creates tax consequences. It creates risks. What's the importance of a booster club? And I think as we look at the first page, it's important to remember that booster clubs are going to raise money for the athletes at the gymnastics club. Keep in mind these are separate organizations, your booster club and your gymnastics club. And there are significant benefits because the money is going to go further for the athletes if parents are donating money, or corporations. We received a question very early on already. Can corporations donate money to a booster club? Yes, corporations can donate money to a booster club. It does not jeopardize the eligibility of the athletes so long as the money is being dispersed evenly amongst all of the athletes in the club. However, the donation of money goes further when the club can apply those funds towards the athletes without having to pay taxes on it. You're going to get further investment into the athletes, and as well as you're going to get more donations if the money is tax donatable. People will be more likely to donate if they can write it off. So it benefits the athletes to have a compliant booster club for the tax reasons on both sides, both for the club itself, the money goes farther, and for the persons donating, they're more likely to donate. Now, when we look at this first page, to qualify as a booster club at the IRS, you have to be operating according to Internal Revenue Code Section 501c3 exclusively for charitable purposes. That is the exempt purpose that you need to focus on, exclusively for charitable purposes that benefits the athletes in their activities. Looking at the second paragraph here, there are some minimum thresholds the IRS is going to focus on. We've included in here today a lot of code sections. Feel free to look those code sections up. I don't want to spend too much time on precise definitions because I know we have a lot more real-world questions that we're going to want to be addressing. But obviously, as I've discussed, there's positive tax benefits that increase the amount of money that can be contributed. It increases parent and private sector donations. It generates tax dollars that are tax-exempt. Now, I want to make sure that today you understand we're talking about nonprofit booster clubs. There are for-profit booster clubs, and most of what we are talking about today will not apply to a for-profit booster club because you don't have the tax concerns that the IRS is looking at that we're going to talk about today because you're paying taxes on the money. I would ask, why have a for-profit booster club? What's the purpose of that? At that point, you're generating a separate organization that has to file a tax return, that has to pay taxes. At that point, why not just run it directly through the club? However, today we are going to be talking about what nonprofit booster clubs need to be worried about. Now, when we turn to the next page of the slide, booster club basics. From the IRS's perspective, they like booster clubs. The IRS is filled with agents who are parents. They've got kids that are doing sports just like you. just like all of your parents, they've got kids doing Little League. They may have kids even in gymnastics. The IRS understands the importance that booster clubs play and that the donation from private sector money plays towards the furtherance of the athletes and their activities. So the IRS is not out to get booster clubs, but they want to make sure that the booster clubs are operating correctly. And frankly, if there are tax dollars that a booster club is quote-unquote cheating the government out of, the IRS is going to be interested in that. They're not out to get booster clubs because they're parents too, but they want to make sure you're doing it correctly, and they're going to look at a two-step process for whether or not the booster club is operating correctly. It's, as we've talked about, an exempt purpose that operates exclusively for charitable purposes. The exempt purpose, as discussed below, is a charitable nonprofit purpose that benefits religious, educational, scientific, literary, public safety, and in your case, your charitable purpose is fostering national or international amateur sports competition. You're not going to have a hard time qualifying under that prong because you're promoting gymnastics in connection with USA Gymnastics, which is a recognized international or amateur sports entity. Operating exclusively for charitable purposes is probably more the issue that we're going to be talking about today, because booster clubs, what are they spending the money on? How are they allocating the money amongst the parents who donate more time or money? These are issues that the IRS is going to focus on. Qualifying as an exempt purpose is not going to be hard. It's going to be maintaining operations that are consistent with operating for exempt purposes that is going to be trickier. Now, when we look at the next page of the slide, a qualified amateur sports organization, these are just definitions, and you can read these, for yourself. And they're worded by lawyers, and so they, not necessarily so clear. A qualified amateur sports organization, you need to have a booster club that is providing fundraising in connection with a qualified amateur sports organization. A USA Gymnastics member club is going to qualify under this so long as we're promoting or facilitating national or international amateur sports competition. Why I put this entire section in there is because the very last portion of this quote, do not provide facilities or equipment. We received a question, can a booster club provide money to buy equipment or pay for the facilities? The answer is generally going to be no, and we're going to cover this later in the seminar more specifically, but it's directly in the statute. Typically, as lawyers, when we look at statutes, if there is something that is not in the statute, maybe there's a gray area, it can be argued. You'd have to look at what do the appeals courts in the different states do and try to figure out how the government really intended to interpret the statute. But in this particular case, when you have something that is expressly put in the statute, the words are actually used, you have to assume that it has primary importance to the IRS, and it indicates that booster clubs cannot provide money to support the facilities or equipment. This means a booster club cannot be used as a front to go buy all the equipment for the club, because that helps the club make money by not having to spend money, okay? And that's, at this point, helping to avoid the payment of taxes on tax dollars that are going to pay for facilities or equipment that ordinarily a business that doesn't have a booster club would have to pay taxes on. We really need to focus on fundraising. You need to consider what you're spending your money on, and this section of the IRS code is very important to focus on, because almost all booster clubs that we've encountered and spoke to in some capacity or another have provided money to purchase equipment, to pay for facilities, and we're going to talk about this exception later and how this might be done, but it is a very narrow exception, and you need to consider whether or not your activities are primarily designed to raise money to buy equipment or primarily designed to raise money for the athletes. It's a big difference in terms of being an acceptable purpose for a booster club and a non-acceptable purpose. This next paragraph talks about a booster organization may be educational in nature if it is just teaching sports, but typically this is not applicable to gymnastics clubs. This might be applicable to the YMCA or something like that that has classes not necessarily in connection with sports, but you're going to qualify under the qualified amateur sports organization for this. But you have to consider what the purpose of your booster club is. When you fill out your IRS application in order to qualify for the booster club, you have to indicate what your purpose is. certainly don't be putting facilities or equipment purchases in your application. You have to focus on furthering amateur sports, fundraising for the athletes. Ultimately, the IRS does have the final say on whether or not you're going to qualify. Keep in mind, the IRS, again, they're parents too. They understand that kids play sports. They understand that donations of parents more today than ever is an important part of allowing kids to accomplish what they're trying to accomplish. And sports are expensive. There's a lot of travel expenses. There's a lot of coach time. There's a lot that goes into it. The IRS doesn't want the booster club not to qualify, but just keep in mind when you're filling out your applications that you need to make sure you're qualifying as an amateur sports organization and that you're not in any way indicating that the purpose of the club is to provide facilities or equipment. We go on to the next page. It's called Booster Club's Exempt Purpose, and this is just more a general discussion over what the IRS is looking at for the exempt purpose. A booster club, typically, if it is providing support for athletes that are competing in local or international competitions, that is going to qualify for booster club recognition. Obviously, you have the JO program, you have the Elite program, you have the Excel program. These are the types of competitions that are contemplated here. Even the regional meets, those aren't local in nature, but those are going to qualify so long as you're all members of USA Gymnastics and you're showing some link to national or international competition. Obviously, all of these programs lead to a national or international competition the higher you go up in the levels, but even the lowest levels of competition are progressions towards these higher levels, and the IRS understands that. The IRS will look at whether the organization is training athletes for collegiate, professional, or Olympic purposes. These are the types of issues that come up when trying to decide whether or not this organization is fostering athletic training for national or international competition. Obviously, not all of your kids are going to qualify for collegiate, professional, or not professional, but Olympic, or the Olympics. That's understood. However, you need to provide some evidence that your training is part of the progression pipeline that might someday get that athlete there. Maybe they won't end up there, but it needs to be part of the process. And the reason I bring this up is because you have a recreational side at your gym oftentimes. Most gyms are recreational with a competitive side. There may be some gyms that are only competitive. I haven't encountered that, but booster club funds being used for the recreational side is going to create problems because that is not a training ground for collegiate or Olympic athletes. I don't know how closely the IRS would ultimately look at that, but you need to consider there are other ways to raise money for recreational gymnastics. Booster clubs that typically are providing funding for the athletic competitive side should not be putting money into the recreational side unless there can be an argument made that the money being spent on the recreational side is part of the pipeline that leads to the competitive gymnastics. And Kevin has a point here, so let Kevin jump in.
We saw a question come through earlier about the record-keeping requirements of booster clubs, and this would be an area where it would be of particular importance for the booster club to make sure that its records indicate that it is spending money on the competitive athletes at the gym and that its monies are not being directed toward the recreational side. The record-keeping requirements are strict. It's very important that records are maintained for where the money comes from, where the money goes, how it's decided where it goes, and we'll probably talk a little bit. It's weaved in throughout a lot of these topics, but because the question came up, I thought it was important to address.
Right. Okay. So let's go on to the next page, the IRS examination guidelines. And this is now specifically what Mr. Warren here was discussing. Again, the IRS is filled with agents who have kids, sons and daughters participating in sports, maybe even gymnastics. They want the booster clubs to work. Their guidelines are rigid, but it's with an eye towards making sure that the booster club is operating effectively as opposed to cheating the government out of money. The IRS specifically understands the importance that the private sector plays in amateur athletics, and that's an important point. Keep that in mind. They're going to review your programs. What are you actually doing? They're going to want to know what the fundraisers are, how the fundraisers work, how they're being funded. They're going to want to look at minutes of board meetings. You're going to want to have regular board meetings so that you can satisfy the operational requirements of actually acting like a booster club tax-exempt entity. If you're not having board meetings and you're not keeping minutes, you may be jeopardizing your ability to defend yourself if the IRS comes calling and asks, are you really operating exclusively for charitable purposes? They're going to look at your newsletters. They're going to look at, because the newsletters are going to give the IRS, in this case today, they may look at your Facebook pages. They may look at your websites. Newsletters are a lot less common. Electronic distribution of information is more common. You're going to want to save and print those types of things so that you can defend yourself, but also keep in mind what you're putting in your newsletters, because if you're putting activities in the newsletters that make it clear to the IRS that the Booster Club is not primarily operating to fundraise for the athletes, such as fundraisers to raise money for purchase of equipment, you've now put something in writing that the IRS is going to look at. Keep in mind what goes in your newsletters, but the IRS will look at newsletters. They're going to look at the social media pages. They're going to look at the website. They're going to look at your books in terms of the fundraising solicitations to verify that the organization is promoting serious competition or training rather than just throwing parties. We're going to get to this later. You can certainly throw a party for the athletes, and you can use your Booster Club money to do that. But again, that has to be incidental to the primary purpose of your Booster Club, which is fundraising in connection with the competition side and the training side of what the athletes are doing. Incidental versus primary purpose, there's a gray area there. We can talk about that at the end if you have questions. But these are the types of things the IRS is going to look at. They are going to look at some objective criteria that they've developed over the years to determine whether or not the organization's athletes are eligible for national or international competitions. They're going to look at whether or not the sport that the Booster Club exists to promote is a sport that may be played at the Olympics or the Pan American Games. Obviously, gymnastics is. They're going to look at whether or not your athletes are of the caliber that makes them serious contenders for the Olympics or Pan American Games. In this particular case, the IRS understands that most athletes are not going to qualify for the Olympics, but certainly if they're on the competitive side and they're participating in the JO program or even the elite program, that's more obvious, but they've already reached a level where they are training in a competition pipeline that, if they continue to progress, might lead to the Olympics. Whether or not they qualify isn't what the government is worried about. It's whether or not they're in a competition pipeline that could allow them to reach that step someday, and that's really not going to be a problem. But do the athletes demonstrate a certain level of talent and achievement in order to receive support from the organization? Again, if you're in the JO program at all, you probably are generating sufficient talent and achievement in order to qualify. But again, this calls out the issue of the recreational side of your gym, and what are those athletes doing? If they're just doing a class once a week, are those athletes really in any kind of training program that puts them in a place to be contenders for collegiate, professional, or the Olympics someday? I don't think that the recreational side really fits that definition. These definitions here and these questions that they're asking, these aren't the only questions that they will ask. They will look at all of the qualitative information you have to offer that, when looking at the balance of it, convinces them that your primary purpose is charitable purposes towards national or international competition. They're going to look at does the organization provide intensive daily training? Most of the competitive kids are training more than once a week. The recreational side isn't going to meet that threshold because they're not really providing intensive daily training. They're providing once a week type classes. So again, this just helps to differentiate between Booster Club funds being used for recreational versus the competitive side of your gym. Is the organization devoted to improving the performance of a small group of outstanding athletes? I think all of your athletes are outstanding just for participating, and obviously that is the purpose of the Booster Club, to raise money, to help with the training, to defray expenses, to pay for the coaches' fees. These are all things that are necessary to help improve the performance and help their long-term goals of the athlete. Is the organization a member of the United States Olympic Committee? Well, certainly if you're a member club of USA Gym, USA Gymnastics, you're going to qualify under that exemption. I don't think a booster club raising money for a USA Gymnastics member club is going to have a hard time qualifying. But these are the things that IRS is going to look at. They're going to review your program specifically. Your record keeping is going to be of paramount importance when trying to defend yourself should issues ever arise, as well as if you ever want to have an accountant or certainly a law firm, an attorney, us, anybody, look at your booster club to determine whether you're doing it correctly. If you don't have paperwork, no one's really going to be able to give you an accurate answer to that question. So the more specific you are with respect to your record keeping, the more serious you take it, the better off you will be. And so now we're going to...
Well, I want to make one point on this whole slide here, the IRS examination guidelines, and that's that these weren't just dreamed up out of the air. These questions and these issues were all developed by the IRS in response to problematic situations that they have come across. So, I think it's something we've seen in the past is where gym owners try and use a booster club to defray some of their expenses for some of the recreational programs and other things, and it makes the gymnastics club more profitable, but clearly using the booster club in that way does not meet the 501c3 nonprofit guidelines.
Okay, so we're going to now turn to the next slide. We're going to now get into the pitfalls. What is the IRS looking at? And this really comes under two prongs that most booster clubs fall under. And I'm going to turn the speaking over to Kevin now, who's going to talk about the basic requirements for the charitable purpose requirement.
So Mark just talked a little bit about, or a lot actually, about the intention of the booster club to foster national or international amateur sports competition with the exclusion of the provision or purchase of equipment for use by the athletes. But one of the, there are two prongs that apply to whether or not your organization is actually a charitable organization. One is called inurement, and one is called private benefit. The best way to look at those two terms is to think of inurement as what happens to the money, to the funds, inside the booster club. And the private benefit is an evaluation of what happens to the funds outside the booster club. One issue that we see frequently, and we get a lot of calls on the phone from clubs all over the country asking us about this, what the IRS calls pay or do not play. You are probably more familiar with that concept as a point system, and people want to know if those are acceptable. Overall, in general, the answer is no, they are not acceptable. These types of arrangements take a lot of different forms. It could be the booster club's requirement that if the athlete's parents or if the athlete's going to participate in the program, that the parents have to donate a certain amount of money per year or a certain amount of time per year, promoting booster club activities, or attend a certain number of events per year. And if they don't, then they get penalized. And some systems have been set up to recognize the parents that put in more time and attend, donate more money or attend more events or put in more effort into fundraising activities than others. As we're going to talk about in a little bit, none of that is acceptable. Directly from the IRS, you'll see the quote here down at the bottom: raising money for your own kid is not charity.
And we would add donating time in order to further benefit your own kid is not going to be acceptable either.
Right. It doesn't matter what type of benefit it is. It can be money or time or anything else. That's all the same thing. So basically, as you'll see, we'll get into this in a little more detail. The funds from the booster club cannot be directed toward any specific individual child based on the amount of effort, time, money, anything else contributed by that athlete's parents. So if we move on to the next slide, we talk about the inurement prong. And again, think of inurement as meaning inside the booster club, not what the booster club dispenses for any of its activities, but what they do with it inside. So again, no part of the net earnings of the booster club may inure to the benefit of any private shareholder or individual. And when we're talking about private shareholder here, it means the owners, directors, officers of the booster club itself. Because remember, a booster club is a separate legal entity. It is a company. And the nonprofit status that the IRS grants is granted to the company. So someone still owns it and is still responsible for running it. That's what a private shareholder is. When we say individual here, we mean any particular athlete or child. So a parent-run booster club must be organized so that it benefits the entire class of athletes or participants and does not favor certain individuals over others. And what the IRS refers to this as an insider preference. And just as I was talking about before, that's when you're naturally going to have some parents that are go-getters, and they're really into all of the booster club events, and they're going to put more time in than other parents. And sometimes it seems a little unfair that, Susie's parents spend a huge amount of time organizing booster club activities and raising money for the booster club, and then that money has to be distributed equally among all of the athletes in the club or in a particular class of competition in the club. But that's just the way it is. You cannot have any insider preference. The next point is that a booster club must ensure that money is not given directly to a participant and or that participant's parents. It needs to be used to offset the cost of participation in the program. So a booster club can raise as much money as it wants, but that money cannot be dispersed directly to the athletes. And this is where things can get tricky because a lot of the fees and costs and other items associated with participating in these competitions is handled by the club. So it has to be clear that the booster club is paying for, a certain thing. If the booster club itself can pay those fees, that's better than running them through the club. But it's certainly an area that the IRS would look at if any kind of an audit or examination was made. And we fall back on the record-keeping point that we made earlier. Whenever funds are dispersed, you need to keep records on how they're being dispersed and the process you use to make sure that the funds are equally distributed among a particular class of athletes. We talked a little bit about the system. Well, we talked a lot about it, rewarding parents based on their time and effort. This just isn't. It's not acceptable under any circumstances, really. The requirement that each parent member of the booster participate in fundraising activities in direct proportion to the benefits they expect to receive causes a direct benefit to flow to these parents. So basically what this point is saying is you can't require a parent to join the booster club and, again, participate in 4 events or donate $650 in a year or anything like that. So you can't force any contributions to the booster club from the parents.
And I think this is an important issue because we've encountered many booster clubs that have minimum fundraising requirements. You either raise the money through whatever your fundraising activity is, or $200, whichever. You can write the check, or you can go sell the cookies, or you can go sell whatever it is that the booster club is selling in order to raise money. But either way, you're writing a $200 check at the end of the year. That's a mandatory contribution. If the parent doesn't want to contribute anything from the IRS's view, that's acceptable, and their kid still has to receive the same amount of benefits from the booster club without any upset or frustration by the booster club. And if you're only providing booster club funds to those parents who contribute the money or donate their time, that's called cooperative fundraising, to use the IRS term, and that's not acceptable. It seems incredibly unfair. There are other ways to deal with parents who aren't carrying their weight. However, the booster club is not the proper vehicle to punish or deal with parents who aren't carrying their weight or who aren't contributing. Maybe that's just a person you don't want at the gym if they're not participating in a productive way for the booster club or for the gymnastics club in general. The booster club has a very specific purpose, however, and it's not that, and that can jeopardize the tax status of the booster club, and the next thing you know, the booster club is going to start having to write a retroactive big tax check for all the money that it collected if it determines that the booster club is not really operating exclusively for charitable purposes and meeting the inurnment requirement, and the parents are going to have to write a nice tax check for all the money that they claimed was a tax write-off over the years. The IRS can go back a number of years, so you want to be very careful with respect to avoiding the inurnment problem that Kevin's been talking about. Kevin's going to go into now. There are exceptions, and fortunately these exceptions apply to gymnastics clubs very nicely.
So the takeaway from this slide is, in general, you cannot require parents to contribute time or money to a booster club, and you have to dispense all of the money equally among the athletes that are participating. So if we go to the next slide, it's called permissible exceptions. And there are ways that you can direct funds to gymnasts who qualify for particular events. The club, the booster club, is not prohibited from making decisions as to where to apply its funds if the recipients are based on certain non-discriminatory objective criteria. So what that means, this non-discriminatory objective criteria, means that the same standard is applied to everyone, all of the athletes in the club, or a select or a certain subset of the athletes. Some of those criteria are athletic performance, talent, and ability.
And keep in mind here also that what is not listed here is parent donation of time or money.
Right.
The objective non-discriminatory criteria can be athletic performance, talent, and ability, not parent time, not parent money, not donations. Those are not objective non-discriminatory criteria that the IRS would approve. So these three that Kevin's going to talk about are what is going to allow you to apportion money to selected athletes who qualify for different events, and I'll let Kevin continue.
And I'll make one point before we continue. We keep saying you, and we realize that you are not the booster clubs. Or if you are, by the end of the presentation, hopefully you will decide that you're not going to be part of the booster clubs anymore. So when we say you, we are talking about the people who are running the booster clubs for the most part. Right. And there may be some parents that are on the line too, and that you is directed specifically toward you. So if you think about this direction of funds to particular athletes exception, it actually, think about it from a common sense perspective. You have different athletes that are in different levels of competition, and you may have 15 athletes that are looking to compete at a particular meet, and for whatever reason, for whatever qualification reason, only 8 of them are going to be able to compete. It is acceptable to exclude those that, for whatever reasons, don't meet the qualification to participate in a particular meet, and then you can apply the funds to support just the 8 that actually made the cut. And that's basically a combination of this athletic performance, talent, and ability. There are different qualification competitions, such as the Junior Olympics, the Western or National Championships, or other elite or qualifying competitions, and it's all right to only support the athletes that make it into these types of competitions.
Well, I think when you say only support the athletes,
direct funding.
What Kevin is saying is if 4 athletes qualify for the JO Western National Championships, you can take the booster club funds and pay for those travel expenses for those athletes, and pay for the coaches' fees for those athletes, and no one else in the gym is technically receiving that benefit. But that is because those athletes qualified based on objective, non-discriminatory criteria for those events. That will not be deemed as inurement to the benefit of 4 specific people. Remember, the inurement prong requires that the money be used to benefit all athletes equally, or at least that all athletes equally have the opportunity to qualify for those particular events, and maybe some of them didn't. So applying funds to only those who qualify for a specific level of competition, an elite competition, something that requires travel across the country, as long as that opportunity was available to everybody based on athletic performance, talent, or ability, you're going to be fine. And that's a very common use of fundraising dollars for booster clubs. And so don't be concerned that that violates the inurement prong because only 4 kids out of 80 made it to that event. Or if you're talking about an elite, you may only have 1 kid out of the entire gym who's receiving booster club funds. That's okay as long as it's athletic performance, talent, or ability that is the determining factor of why they got money towards their travel expenses and not their parents' contribution of time or money.
And an easy way to support that type of differentiation of who gets funds and who doesn't is to have a meeting of the parents and document it. Say, we are going to pay for the travel and lodging expenses of the athletes that make it to the Junior Olympics Western Championships. And you document that in your minutes or your record keeping, and you're set. Then you're going to be able to take advantage of this exception that everyone benefit equally. So we go to the next slide, which is the continuation of some of the exceptions. Using booster club funds to collectively pay for meet fees, uniforms, coaches' fees is permissible if it's incidental to the primary purpose. So you have to remember that the primary purpose is to support the athletes, and you don't want to do these things. You don't want these things to be your primary activity, and the reason why is going to be what Mark explains in a little bit, that you don't want to provide too much of a financial gain to the actual gym itself. The things that the Booster Club does have to provide benefits directly to the athletes, not to the club.
Right, and I'll jump in real quickly on this. A very common use of booster clubs is to act as a clearinghouse, collect all of the money, and then you write one large check for meet fees or for uniforms or for coaches' fees. Booster clubs do that all the time, and the IRS recognizes this as an acceptable clearinghouse activity. What the IRS is focusing on is whether or not this activity as a clearinghouse activity is the primary purpose of the booster club, which should still be fundraising for the athletes. If you have a booster club that is collecting $50,000 a year in clearinghouse expenses to pay for meet fees, uniforms, and coaches' fees, but is only fundraising at the end of the day $2,000 a year, well, the primary purpose of that booster club is a clearinghouse activity. It's not fundraising, and that's going to jeopardize the status as a 501c3 exempt organization. And so you really have to think about whether or not using the booster club as a clearinghouse activity is something that you want to do. It certainly makes things easier, but it could create a taxable event. It could create and jeopardize the tax-exempt status of the booster club, because theoretically, if the money was just to go through the gymnastics club, not the booster club, the gymnastics club would collect all the money, they'd write the check, and then they'd write in their books that they wrote all that money to a club for a competition or to a gymnastics leotard company or whatever it is. It won't show up as profit on the gymnastics club's books because that should just be a pass-through money that will not create a taxable event for the gymnastics club. So why wouldn't you want to run these clearinghouse activities through just the gymnastics club? And that's a question for another day. But when you're running it through the booster club, it does create a little bit more risk that you're going to create the perception that the primary purpose of the gymnastics club is not fundraising, it is clearinghouse activities, and it really depends on how many kids you have in a club, how much money goes into clearinghouse activities. We really can't answer these questions without seeing how much money is raised in fundraising versus how much money is applicable to the clearinghouse activities, but that is a question that gets raised, and I received a question the other day regarding having to file a full tax return versus a more limited 990 easy tax return. Booster clubs, if they meet certain thresholds of revenue, have to file a full tax return, which might increase the expense of the booster club. It might create more complications in terms of exposure to what the booster club is actually doing. That might raise an IRS flag. And acting as a clearinghouse activity, even if those funds are not ultimately going to result in a taxable event, even for the booster club, creates the risk that you're going to meet that minimum revenue threshold that causes you to have to file a full-blown tax return. Not that that's a problem, but it might just be an additional expense or additional risk that could be avoided, or that's an unnecessary risk if you're doing something that is not 100% acceptable. So that's just something to think about. But I think the biggest risk with the clearinghouse activities, honestly, isn't the booster club. It's the parents that are writing off the $1,200 for meet fees. They write that check to the booster club, and then they write off on their tax returns $1,200 donated to a booster club, when in fact that was $1,200 given for a clearinghouse activity, which is not a tax-exempt event, but parents are doing it, and they, when parents do that, they could get the booster club in trouble if they're writing off as a tax donatable event their meet fees and their uniform fees and their coaches fees. And this really comes down to the primary, something that the booster club should really focus on: educate your parents. Fundraising money, they can write that off, but clearinghouse money for meet fees, uniforms, coaches fees, that's not money they can write off, and I guarantee you a lot of them are doing it. Clubs have gotten in trouble for that. That's a huge trigger for the IRS, and you really should educate your parents as to what they can write off and what they cannot write off with respect to donations to the club.
And think about when you're thinking about educating parents on that issue, what are items, what fees are they going to have to pay regardless of whether there is a booster club in existence? They're always going to have to pay the meet fees. Those have to be paid. They're not generally part of the money that is charged by the gym for participation in the program. So if the parents are going to have to pay those fees regardless, that's not something that's going to be a legitimate expense that can be written off as a charitable donation on the parent's income tax return.
So before we move on to the private benefit prong, why don't we take a few questions? We've got about 30, 40, 50 questions here. So really the way this is going to play out is we're going to answer as many of these as possible right now. I only want to take about 5 minutes on the questions, move on to the private benefit prong, and then you have our email addresses on the very front page of this PowerPoint presentation. You can also call us. We'll be sitting here after the webinar is concluded. Give us a call if we don't get to your question. There's a lot of questions here, so we're going to try to get to a few of them real quickly, and then I'm going to move on to the private benefit prong. So just looking at some of these questions.
Now, Mark,
yes.
Are you still there? Okay. We can actually read some of the questions aloud. Would be great so everyone knows what we're answering, and I'm sure you guys will do that just as we did during the presentation. Yes, we're going to do that right now. And we'll have a few. Okay, that'll be perfect.
Okay, the first question I'm looking at is, what is the IRS's view on charitable class with booster clubs? I'm not actually sure I understand what that question is referring to. So whoever submitted that question, if you can shoot me an email afterwards or call me, and I'll be happy to take that question. The next question I'm looking at, once I understand the question, we'll be happy to walk you through that. The next question, many of the boosters in our area handle assessments. I think we were just talking about that, which includes paying for coaches' fees. We've discussed how that isn't acceptable. Use of the booster club, just make it an incidental, not primary purpose of the booster club. But the question goes on to ask, our coaches are obviously employees of the gym where the team works out. Our coaches, independent contractors, are employees of the nonprofit if they pay for coaches' fees. I don't think payment of coaches' fees will render the coaches either an employee or an independent contractor of the booster club, but these really get into some specific questions regarding when somebody can become an employee or an independent contractor. It does a little bit depend on state law.
Hugely depends on state law.
Hugely
there are a lot of different state laws on how that stuff is governed.
So as Kevin points out, hugely depends on the state laws, but that may be if there's a specific issue that the booster club is paying technically all of the coaches' costs, and the gym is avoiding paying any coaches' fees, and you're really just running the coach's salary through the booster club because that's a tax donatable and tax exempt organization, that is not going to be acceptable. Coaches' fees for a meet, that's going to be fine, but if the coaches' fees for their for training, their weekly salaries are running through the booster club, that's going to be a problem. You cannot do that. That's helping the gymnastics club save money by not having to pay expenses. That's helping the gymnastics club to profit more. That's going to violate the private benefit prong that we're going to talk about.
And no tax gets paid on it.
And no tax is getting, right. So you cannot run coach salaries through the gymnastics club. Whether they're an independent contractor or an employee might be a different question, but you can't run their salaries through that. Coaches' fees for a specific purpose, a meet, a travel meet, things like that, that's fine. Can a booster club purchase equipment and give the equipment to the gym? That is really something that can be nothing more than incidental. If you have a couple $100,000 a year, and this is just a very gray area, there are no specific monetary guidelines here, but if you're raising a couple $100,000 a year in fundraising and you spend $2,000 on a gift at the end of the year to the gym of an ice machine or a balance beam, that's an incidental purpose. If you're consistently buying equipment that constitutes a larger percentage of the dollars of the booster club, that's going to violate the private benefit prong, because now you have the gymnastics club benefiting privately from booster club money, and the club doesn't have to spend its own money to buy these items of equipment, and the club doesn't have to make the money that they have to pay taxes on to buy the equipment. So because the equipment issue is specifically listed in the statute, the purpose of the booster club is to raise money for the athletes, not to buy equipment for the club or to pay for the club's facilities. An incidental gift is probably fine, but there's no bright line test, but that cannot be the primary purpose of the booster club. Buying equipment helps the club save money and not have to spend its own money on equipment purchases, and that's going to be a red flag if it's more than incidental. But I'm not saying you can't do it, but incidental is the gray area that you should always consider.
Incidental means very, very, very small. That's the way to look at it.
How long can we wait to be granted nonprofit status from the IRS? We have heard over a year. The IRS is definitely slow on this. I don't know that there's any guidelines. Some of it depends on how clear your paperwork is, how good a job you do, and some of it's just the IRS is backed up with a lot of this. There's more nonprofit requests going out today than ever before, just because of the way the economy is working and the private sector's importance and fundraising. But a year could take place. Kevin's got a thought on this.
Yeah, the reason the IRS has started looking at 501c3 applications in much greater detail these days because they've discovered so much fraud. And not just in the gymnastics area, just in general. People are trying to use those entities to divert profits, essentially, to not pay taxes on money they're making. So they're making them harder to get.
Right, and sadly, every time there's a natural disaster around the world, or a tornado in the United States, anything, these types of nonprofit organizations crop up to support victims and relief efforts and rebuilding efforts in those affected areas, and there's a lot of fraud that goes in with that. And the IRS, that's not something that you see on the news every day, but every time there's a natural disaster, the incidence of 501c3 fraud go up, and so the IRS looks very closely at these applications. So it does take time, and I don't know if it's a year. I had heard 10 months at one point, but I've heard as short as 6 and 5, and I've heard longer than a year. I think some of it depends on how busy the IRS is at any particular point in time, how clear your application is, how few questions you have. That obviously relates to making sure you do the application well and correctly. But so that's a little bit dependent on a lot of factors. What about individual equipment for athletes such as grips? That's probably okay because you're buying equipment for the athletes. As long as you're not buying it for the gym, grips for the athletes, as long as it's equal for all the athletes, all of them have the ability to get it. I don't know that a kid in level 2 needs to be buying grips. I don't know that they make grips that small. However, it has to be something that is equally available to everyone based on talent, ability, athletic achievement level. I think grips are fine. What about if a booster club supports a program that is sponsored by a governmental agency as opposed to USA Gymnastics or something like that? Perhaps that's what the question is, and therefore not subject to taxes. I think that's going to be fine. Maybe I'm not understanding specifically what the governmental agency is, and if the governmental agency sponsored by a governmental agency. Again, the Booster Club's purpose is to fundraise for the kids. Where the money comes from, whether it comes from parents, a corporation, or a tax-exempt governmental entity, all of these things aren't going to change. The ultimate question is of what is the Booster Club doing with the money once it receives it. So unless I'm misunderstanding the question, please call me afterwards, but I don't think that'll impact how or why a Booster Club qualifies as exempt. Let's see here. Going on, next one. What about Excel and Booster Clubs? Excel is an interesting issue that I don't think the IRS has ever had to deal with, because these are not athletes who theoretically are training at the highest level of competition. I think that's going to be a gray area, but Excel is a recognized competition form. There are, I'm sure, athletes who jump from Excel over to the Junior Olympic program. Typically, I'm sure it is 98% more common that they jump from the JO program over to Excel because it's a little bit more simple of a program, but it's
competition, right?
But there still are local competitions. It's still a activity that is Excel is a USA Gymnastics program, so more than likely that's going to be fine unless there's some indication that these kids will never compete at a collegiate or Olympic level. I think some of the Excel athletes may ultimately go on to collegiate gymnastics, but again, it's a fairly new program, so I don't think the IRS has ever tested how it would analyze that. I think it is certainly in the gray area portion of our discussion because it is a less serious form of training, less likely that the athlete is ultimately going to reach the collegiate or higher level, and therefore I think Booster Club funds for the Excel program probably acceptable, but I haven't seen any IRS decisions that impact that. Give me a call. We can discuss that a little bit more specifically. Let's see here. Can the Booster Club charge membership dues? The Booster Club cannot charge required membership dues because that is the Booster Club can charge membership dues. However, if someone doesn't want to pay the membership due, the Booster Club cannot complain about it, nor can the club, and the application of the Booster Club funds are still required to flow to that child's parents. I think that is not the best way to raise money. It raises red flags of required donations that violate the inurement prong. So give me a call if that question isn't answered sufficiently. What if a Booster Club purchases uniforms, makeup, etc.? I think we've talked about that. Can they require parents to reimburse the Booster Club? Sure, that's fine. If the club is buying purchasing uniforms, that's the clearinghouse activity. It seems like this question has flipped the clearinghouse activity a little bit in terms of can the Booster Club purchase things, pay meet fees, go purchase uniforms, maybe go purchase makeup, etc., and then act as a clearinghouse activity and require reimbursement? Yes, but if someone doesn't want to contribute the reimbursement, you can't complain one way or the other. So typically you want to collect the money up front, but that's a clearinghouse administrative activity that has to be incidental to the primary purpose of the club. Can money go towards hiring, paying coaches? For meets, you cannot circumvent the club's requirement to pay salaries of the coaches through the Booster Club because ultimately the Gymnastics Club is the employer of that coach, not the parents. Unless the parents are setting the wages, hours, working conditions, and are in charge of the hiring and firing of those coaches, the Gymnastics Club is ultimately the employer and will have minimum wage obligations regardless of what the Booster Club does. And in fact, you don't want the Booster Club to be deemed employers because there are a lot of laws applicable to being an employer, including contributing to Social Security and all the employee taxes and all the employee contributions and payroll taxes. You don't want the Booster Club to have to do that. So do not run coach salaries through a Booster Club. That's probably a huge problem that exposes all the parents to employer risk. Let's see. So we're going to continue the rest of the questions at the end. I'm going to quickly jump over to a hugely important, although more simple, prong. Let's move on to the private benefit prong of the Booster Club. You must be careful to avoid, remember, the inurement prong is how is the money being dispersed between and amongst the members of the Booster Club, the parents and the kids in the club. Are certain kids getting more or less based on the parents' contribution of time or money? The private benefit prong is asking, how are the funds being dispersed outside of the club? Where are the funds going? What is it actually paying for? And here you have to be careful that the private benefit prong is not violated by benefiting the gym. Okay, is the club buying equipment? We've talked about this at length. Is the booster club paying for salaries? These are all going to violate the booster club's private benefit prong, because you don't want to pay for things to help the club save money on expenses it would ordinarily have to make. You can buy, insubstantial or incidental. You can give a gift to the club, but the primary purpose of the club has to be fundraising for the athletes, not paying for things the gymnastics club would normally have to pay for as an ongoing business concern. Operations of the booster club, you need to be very careful here that owners of the gymnastics club, managers, officers, supervisors of the club do not sit on the board of directors for the booster club, because then you're going to be at risk that there's going to be a perception that the booster club, that the gymnastics club is calling the shots for the booster club, is directing where the money goes, is having a say in terms of how money is allocated, and you want to keep separation of powers, so to speak, here. And it's very important for booster clubs to receive consultation and advice from club owners, coaches, employees, managers, and supervisors, because those are the people who have been doing gymnastics 15 or 20 years. You have parents who go through the gymnastics club and are in a booster club for the 1 to 2 years their kid's doing gymnastics before the kid quits and switches over to diving. Or you have parents who just don't understand how gymnastics clubs work and what the real needs are of the athletes. So receiving advice from the professionals, being the coaches and the managers and the supervisors and the owners of the gym, is a very important part of a booster club. Designate a segment in the meeting for them to come in, provide advice, tell people how things work. But ultimately, when it comes to voting, you can't have individuals that represent the gym vote on any issue that the booster club is voting on in terms of allocation of funds. You can use them for consultation or advice. If the organization purchases any equipment for use at the private facility that's more than insubstantial in terms of a gift, the IRS is likely going to conclude that the gymnastics club is simply using the booster club to circumvent its own obligation to buy things and equipment, and you can't have a booster club that exists to support the commercial enterprise, being the gymnastics club, to help the gymnastics club avoid payment of expenses that it would ordinarily have to pay. I think we've talked a little bit about it. What is insubstantial? We're on the next page now. It says private benefit continued. What is insubstantial? This is a balancing test. It must be incidental. There's no bright line test, and if you consult with an accountant or an attorney or some other professional or someone who claims to have expertise in this, and they tell you there's a direct dollar amount that qualifies as insubstantial or not, they're not telling you the truth. The reality is that the balancing test is going to look at the quantitative, how much money is being used, what is it being spent on, what is it actually for. That's the quantitative and qualitative tests to determine overall whether or not it's incidental. Every situation is going to be different, and you're going to have to, if in your gut you feel like this is more than insubstantial incidental, then perhaps you should err on the side of caution here. But there is no bright line test for what's more than incidental. It's going to look at, in the real world, how is the money actually being used. They're going to look at it. They're going to look at everything, including things you'll want them to look at. You'll show them your books. You'll show them your records. You'll show them what you're actually doing and why you did it that way. They're not going to look at it just a single dollar amount. If it's more than this, it qualifies. If it's less than this, it doesn't qualify, or really the other way around. They're going to look at the actual substantive factors that went into how it ultimately played out, and that's called the balancing test for lawyers, and it allows a lot of gray area that both benefits you and hurts you depending on which side of the gray area you really fall. Moving on to the next page, we just talked about this. Owners of clubs, stay off the board. Parents, you're in the right place. You should be on the board, and you should stay on the board, but with respect to club owners, managers, supervisors, coaches, stay off the board. Being a booster club for it's important to consult. It's important to contribute your expertise, but you can't have a say in where the money goes. You can just help educate the parents who really don't know what they're doing. You can help educate the parents to understand how their decisions need to work and what is in the best interest, and how the booster club can help the athletes over the next year, over the next month. These are important parts of participation from club owners, supervisors, and so forth. The reality is that a lot of parents on the boards will make decisions because they want their kid to succeed. We all have competitive parents. We all know the competitive parents in the gyms who want more money to go to their kids, who want more of the coach's time to go to their kids, who want more of everything to go to their kids, including the attention and the pride. However, these are the parents that oftentimes sit on the board, and they can obscure or complicate good decision making, and that's why consultation from gymnastics owners, managers, supervisors, coaches, is so important because you know your business. Parents often don't, except experienced parents who've been at this for many years. But from voting standpoint, stay off the board, consult with the board, provide your experience, but that's really the limits of what your involvement should be if you're a club owner, supervisor, manager. The next page or two, we have booster club tips to maintain status. We've talked about a lot of this. Good record keeping. We're on the booster club tips to maintain tax status. Good record keeping. Apply your resources from the booster club on objective, non-discriminatory criteria that has nothing to do with the time, contribution, or money being put in by the parents. All gym members must be allowed to participate equally in booster club activities or resources. Cooperative fundraising, as we've discussed, is not allowed. Can't help the booster club make the gymnastics club make money. And I think these tips, if you want to just take a look through this, are more or less self-explanatory. If you have any questions, give us a call. At this point, we're going to take a look real quickly if we have any additional questions. And then after that, feel free to give myself, Mark Jacobs, Evan Warren an email or a call. We can answer questions. We can certainly help provide a review of your booster club's activities. If you're not sure if you're doing it right, if you're not sure how the IRS would look at it, we can conduct an audit review for you privately of how your booster club works, answer questions. We're happy to do that. We can also help you setting up booster clubs. Lakeisha, at this point, should we take more questions, or are we out of time?
Yes. Well, actually, I'll just interject really quickly here. We do have several questions. We may have to go ahead and have them email you all, and we have their information on the last slide. We do have on our presentations here a part of the article that Mark and Kevin wrote for our Technique magazine, just that talks about this topic in detail as well. So most of you all, if you're members on the call, you would have already received this magazine issue. But it is here. You can call us for back orders if you would like to order that. And again, their contact information is on the last slide here. We will have this entire webinar with the questions that were addressed during the webinar on our USA Gymnastics webinars page. You can also, directly following the end of this webinar, there will be a survey for you to put any of your questions that were asked at the very end that we weren't able to address. Mark and Kevin, if we could just answer just a couple more questions. I know we have probably about 20 more questions, but if we could just answer a couple more questions. The last question I sent, if a family is unable to meet their clearinghouse expenses, meet fees, uniform fees, coach and travel fees, can they be restricted from participating? Are there any recourses for individual fundraising? And this may have been something addressed, but we can go ahead and see if we can answer that.
I think that you can also use, ability to pay as a valid
objective, non-discriminatory criteria.
I mean, some kids can't necessarily, afford to pay all these things. They don't come from rich families, and it's an expensive sport. You can use that as an objective criteria as long as you apply it across the whole club.
Right, and what we're talking about here is if someone hasn't paid their meet fees or their uniform or doesn't want to pay the coaches' fees, these are clearinghouse activities that are incidental to the fundraising activities. You cannot apply the fundraising money discriminatorily and exclude that child. But clearinghouse money is not really fundraising money. That's why it has to be incidental in the first place, not the primary purpose of the club. And because it's clearinghouse money, that's someone, if you don't pay for the movie ticket, you can't get into the movie.
But if a kid can't pay to participate, that can be one of the things that the booster club is there to help. Whether or not it's clearinghouse activities or not, as long as it's applied equally to everybody, all those who can't afford to pay will help you meet some of these expenses.
Right. Where that child, let's say, for example, however, that the club decides to give that person its own private exemption on the coach's fees, and they only cover their meet fees, okay? That's a private decision that the gym has to make, and at that point, if there is then contribution towards the kid's travel expenses or things like that that the booster club is making, the booster club cannot exclude that child from receiving those types of benefits. If the club is providing, $20 off the plane tickets for every single kid, whether or not that kid has contributed its full his or her full boat or not, that kid still has to receive that $20 off their travel expenses. They may not have paid the full price everyone else paid, but with respect to fundraising dollars being used to defray expenses, they still get to participate 100% equally, even if they haven't paid all their clearinghouse activities. Okay, next question, Lakeisha, if you have it.
Yes. Can a budget be made to distribute the funds to different levels or competitions, optional and elite? So are budgets allowable for?
Absolutely, because that's an objective, non-discriminatory criteria. Athletic performance, talent, and ability. That's the way to do it. There are every kid that's participating at level 9 has the opportunity to qualify for state championships, for regional championships, and then for the Western or Eastern national championships. They all have that same opportunity, and there's no discrimination against any of them based on that. And only 3 may qualify, maybe only 4 may qualify, and those are the ones that are going to get the money maybe for the plane tickets, but that's objective, non-discriminatory criteria that's going into that decision-making process. And within a club, you're going to have different levels, level 3, level 4, level 6, level 9. And as long as you have objective, non-discriminatory criteria to determine the different groups that are receiving different types of resources, that's going to be acceptable too, because the level 9 and 10 kids and the elite kids are going to need more resources probably than the level 3 kids who may only be traveling 20, 30 minutes, aren't going to get on a plane for another 2 or 3 years of competition. So there is going to be differentiation, and that is an acceptable use of the Booster Club funds to create a budget that is different for each level, as long as the differentiation between the levels is objective and not based on the amount the parents have contributed at that level. Does that make sense? Hopefully that makes sense. If it doesn't, please give us a call. All right, next question.
Okay, the next question, can the gym owner require parents to be a member of the Booster Club and pay the annual membership dues as a part of being a competitive team member?
No.
All right. Is there a limit in the amount of money that can be held over from one year to the next? And is the use for funds for the running of a Booster Club, accounting and legal expenses, or administrative costs considered acceptable?
So, how much can be held over from year to year is going to be a question for an accountant.
Perfect.
In regard to the expenses of actually running the Booster Club, yeah, those are valid expenses. It costs money. Remember, it's a company, so it does cost money to run a company.
Perfect. Perfect. And I think if you guys could just hit just the 3 biggest points that you had throughout the presentation, just for our newer club owners, just to sum it up. And again, we have Mark Jacobs and Kevin Warren's email and information here on the screen, and it will be available on the website for you to email any of your specific questions, or you can put your feedback and questions in the survey at the end of the webinar. But Mark and Kevin, if you could just give maybe 3 points to sum up, the proper uses of Gymnastics Booster Clubs for IRS.
All right, I'm going to take a shot at this here. The 3 biggest points to keep in mind are, 1, exceptional record keeping in minutes. Do a good job with that. It'll protect you. 2, make sure that funds from the Booster Club are distributed equally, regardless of whether a parent or family contributes the same amount of time or money. Don't require parents to donate. That's going to create problems for you. And don't use Booster Clubs to help the club make money, save money, circumvent having to spend its own money on expenses. We've talked a lot about that, but a Booster Club cannot exist to help a gymnastics club make money or save money. It has to be a primary purpose to fundraise for the athletes. So those are your 3 biggest points, I think, to keep in mind.
Wonderful, wonderful. So I want to thank you all. Thank you, Mark Jacobs and Kevin Warren with Michelman and Robinson LLP. Thank you all so much for guest presenting this USA Gymnastics webinar. Thank you all for attending, and we will see you next year for our next USA Gymnastics webinar.
Thank you.
Thank you. Thank you.